If you have been struggling to understand candlestick patterns and charts, in this video I'm going to be showing you the top 5 candlestick patterns that is suitable for every beginner. So if you're a beginner in forex trading, in crypto trading, these top 5 candlestick patterns I'm about to show to you will help you become profitable if you understand and master them very well, and also if you use them with the conferences I'll be sharing with you in this particular video. Alright, you're welcome to Blockchainplus. If this is your first time of visiting my channel, please kindly subscribe to this channel. Hit the subscribe button, turn on your notification bell icon so that you get notified whenever I post videos like this. And also, if you like this video, just give it a like and then drop a comment in the comment section if you have any question for me, and I will gladly answer all of your questions. And most importantly, if you're not yet in my Blockchainplus Academy, where I mentor and teach people how to trade and stay profitable, please go and join that academy, because you have to learn. You have to have a mentor. And most good thing about that academy is that the fee is very cheap. We just 30,000 naira. You have me as your mentor for 1 full year to mentor you and teach you everything about trading. And that's not just all. You also be added into my signal group, where I give people professional signals, premium signals that help them stay profitable. So if you look at it right here, you can see this is our Blockchainplus signal group. If I open it right here, you can see this trade. This was a strategy I gave, and you can see this was our trade yesterday. You can see it did that is 152%. That's same trade. And you can see there's another trade we also got yesterday. This was just for yesterday, and so on and so forth. This is for the academy students alone, if you pay for the academy. But if you don't have money to pay for the academy, you can also join you can also join our free community here. Right here you can see this one. Just search for Blockchainplus community and join the community, because also in this place I drop signals and tips on how you can stay profitable as well. So just join those places so that you will become profitable in this journey. All right, with that, so let's go back to the video of the day. So we're talking about the top 5 candlesticks patterns that is suitable for every beginner, right? Now, before we go ahead to discuss about the candlestick pattern, let us first of all understand what is a candlestick. Now, if you look at this place right here, you can see I've put candlesticks. These are candlesticks. These are candlesticks. You can see them right there. Now, simply as it stands, or as the name implies, it's just a candlestick. We all know what candles are, so it's just that candlestick. But in this place, it is used to represent price movement in a period of time. So when we say price movement, you can see it here, it is used to represent price movement in a period of time. So when we say price movement in a period of time, understand the two different keywords: price movement, period, and time. So that means each candlesticks move within a particular time frame. It could be 1 minute, it could be 1 hour, it could be 1 day, it could be 1 month, it could be 1 week, it could be 4 hours, it could be 15 minutes. Those are the period of time that each candlestick moves. So that is to say that this candlestick you're seeing here could represent 1 minute, could represent 1 day, it could represent 1 month, 1 week, 4 hours, depending on the period that you are setting your own time frame on. That is what it represents. Then the second thing, every candlestick has open, high, low, and close. So these are the attributes of every candlesticks, and candlesticks come in 2 major pattern. We have the green candlesticks, who simply means that price is going up, and the red candlesticks, which simply means that price is coming down. So this is just what the candlesticks are. First, they represent price movement. Second, they have open, they have high, they have low, and they have close. Then third, you can either have a green candle or a red candle, right? So now let's look at the attributes closely. Now, if you look at these 2 types of what candlesticks, I mentioned the red, which is the going down for sell, and then the green, which is what going up for the buy. Now, if you look at it very well, you will notice that, can zoom this out a bit. Now, if you notice this is the sell candlestick. You notice that this is the high. You can see it here. That is the high. Now, this is the open. For every red candlestick, it means that the market opened at the top. This is the upside, right? At the upside. Now that is the upside. The market opened here, then it went all the way to this place, all the way to this high. That is the high. Then it came all the way to this down, and then it went here and closed here. So that's where the market closed. For every red candle, which is a sell candle or a bearish candle, it means that the market opened at the top here and closed at the what? Bottom. The market must open at the top and close at the bottom. It signifies a bearish candle. Now for the bullish candle, which is the green, it only means the reverse, because for the green candle to form, the markets will open at the bottom and close at the top. So the market opened here, it went all the way to this low. You can see the low there. Then it went back all the way to this high, but it did not remain at that high. Then it came here and closed at that place. So the market must open at the bottom and close at the top. So that's the difference between the red and the green candlesticks. Now let's look at how the chart is in reality, or in real life, how they form in real life. You can see that when this market went up to this green candle, you can see when the red candles were forming, you can see the sell here. You can see that the market dropped. When the green candle was forming, you can see it here, the market was going up. Now when the red candle again was forming, you can see the sell, the market dropped. Now you can see the green candle, the buy candles, they formed up here, the sell candle down, buy, sell, another buy, going up. So that is just what happens in the market. This is a perfect example of how it happens in the market, right? So this is the candlestick and everything about it. Now let's go to the reason why candlesticks matters in every trade. Candlesticks matters so much in every trade because of three major reasons. One, it reviews market psychology. So it helps you to understand what the psychology of people are in the market. If there is a whole lot of sell-off, just like this particular candle, it means that there is fear in the market, there's uncertainty, and people are just selling and taking out their money and keeping it. That is what it means. If there's a whole lot of bullish candle like this going up, it means there's a whole lot of FOMO. People want to get in, people want to buy in because they feel there's a whole lot of room for that particular commodity or project to go up. So it signifies what market psychology. Just like you and I believe that if you're trading, if you bought a market around here and then you see this dump coming down, how do you feel? You feel afraid that you're losing your money. And if anything, worst case scenario, you'll be like, okay, let me just sell off at some point so that I don't lose everything. So that is the what market psychology that comes into play. Then it also helps you to spot reversal and continuation. So candlesticks helps to spot reversal and continuation in the market. Now this market was going up. You can see that when this market was going up like this, after this long candle, see what happened? The market continued to come down. You get? So that is what it helps you to do. This particular candle here, if it is me, and I will understand that this particular candle has signaled a reversal in trend, and I would have entered around here for the sell, right? So that is what the candlestick also help you. Then it can be used for timing your entries and exit, right? Now we are going to look at all of this together when we begin to look at our candlestick pattern. Now let's jump into the candlesticks patterns and see pattern number one. So the pattern number one, we are looking at the hammer. So before we look at the hammer, let's look at what the hammer actually does in the market. It actually has bullish and bearish type of hammer. So bullish and bearish reversals. So you can use them to signify reversal in the market. And then how do they appear? Most of the time they appear after a downward or an upward trend. There's supposed to be an upward trend here. Now, how do you spot them in the market? You spot them by seeing a very long wick and then a small body, just like your hammer or your name. Understand? Now, if it is for the sell, if the market has been going down and you see it like this green one here, it shows that buyers are rejecting the lower prices and they want the price to continue to go up. Then if you see this long one here that is red, it shows that sellers are rejecting and they want the price to go down. So let's look at these two together to see. You can see how it looks here. Is that example of the what hammer? This is example of the hammer, how it looks. That's the bullish, and this is the bearish hammer. So let's spot them in the market. You can see it here. You can see this one here, right? You can see after the market came down, you can see that it quickly rejected back up. It shows that buyers are rejecting the down, and if you notice, the price went up a bit before it dropped again. The sellers continued to push it down to this point, then again the buyers rejected it and then took it back up before the market finally went up and it broke this particular high right there. You can see it right there. Now let's look at it again. You can see this one signals trend continuation because this is still for the buy. You can see it's not the sell one. If it was the sell one, which is the red one, the market would have come down, but you see they rejected it upward, and then the market acted as if it was coming down. But what happened? It went back up and broke this particular high right here. You can see the market broke it and continued up. So that is an example of what? Of the hammer. You can see it right here. Let me see if there is any sell hammer here. Okay, I did not actually put a sell hammer here, but if you see this example like this is the green one. If you see it as the red one, then it signifies that the market is going to sell. Now, how do you use them to trade? You don't just trade them alone. You can trade them with your RSI. If the RSI right here, let's say this is the market coming down and the RSI is around 30 region, which is oversold region, and then you see this rejection, then you know that the market is going to push up a bit from here. That's one. Secondly, if you also see it at a support level, now if you look at this, that is a support. You can see this is the support level right here. So if it happens around the support level, you know that okay, from here the market is not going to break this level, is going to go back up at least. If you also see it as a resistant level, and like now this is a resistant, if you see it as at a resistant level right there, you know that this market is going to drop like that. So that is how you use them. You don't just see the candlestick alone and you feel like, oh, it's going to go from there. The only place you see them alone and you want to trade is when it's a trend continuation. Then there is a trend line. You see it happening around the trend line, you know that the trend is continuing. So that is how you use this particular pattern, which is the hammer pattern. Now let's look at the other ones. Let's look at pattern 2. Pattern 2 is the engulfing candle. I love this engulfing candle very well. If you look at the beginning of this class, I showed you an engulfing candle, which is this one, which triggered a trend reversal. So that is also what we are having here. This is engulfing candle. This is what? Bearish engulfing, and this is bullish engulfing. So let's look at the type. We can see that we have two major type, the bullish and the bearish reversal engulfing candles, right? Then how do they form? You see them with a big lock candle engulfing a smaller one. This shows a sign of strong reversal. This engulfing candle, if you see them in the market, it shows a very strong sign of trend reversal. There is no two ways about it, especially if it is happening around the support or resistance region. You know that the trend is about to reverse because there is a whole lot of activities going on in that engulfing candle. So let's look at. I've already shown you how it forms. For the bullish engulfing candle, the bullish candle, which is the green candle, have to engulf the small red candle. For the bearish engulfing candle, the red candle, which is the bearish, has to engulf the small green bullish candle. So let's see it in reality in the market. Now let's look at this place. You can see how this is a bullish candle here, this small one. You can see how this one engulfed it. So with this, there is no two ways about it. You just know that this market is going to sell. Now this is where you will be entering the market. Sometimes if you don't enter it here, if you want to be conservative enough, you draw your Fibonacci. Let me remove all of this. You draw your Fibonacci from this level to this level and wait for like 618, like 618 retracement of 50 retracement, which is around here. So if it retraces to that place, you just enter and put your stop loss right above, and then you wait for the market to play out, right? So that is how you take it. Now let's see Now this was for the bearish engulfing. Now let's look at the bullish engulfing candle. You can see that this green one engulfed this red one. You can see it right there. Now look at it very well. You notice that the close of this bullish one is higher than the close of this bearish one. So that is how you know that it's an engulfing what candle. We're not looking at the wick. You're not looking at the wicks, right? So that's how you know that it's an engulfing candle. So now this one gave us a bullish sign, but this one, if you look at this one, if you notice, it acted as if it was going up. But if you notice, there was a heavy retracement all the way to almost 100% retracement before the market pushed back right up. You can see it right there. So if you were that type that entered because of this one, you entered here and then you came to this one and say, oh, it has engulfed, and you entered here, you can see it just gave you small profit and it went all the way back, but you did not hit your stop loss because your stop loss will be just below that engulfing candle. Then you see the ride back up. So this is an engulfing candle, and this is how you trade it. You trade it within what? Your support and your resistance levels. You trade it within your support and your resistance levels, right? Now the third one is your doji. So your doji is an indecision or reversal candle. It means that the buyers and the sellers, they don't know what is happening. They don't know where to go to. So they're just waiting to see which one supersedes. Now it comes with a very small body and a long wick. You can see it here. You can see this long wick, then very small tiny candle in between. So the market is in an indecision state. That is what it signifies. So you can see the market is undecided. Wait for confirmation. Now most of the time the confirmation will be an engulfing candle or a very long bullish or bearish candle. Now for this case, after the doji formed, you can see the very long confirmation candle confirming that, oh, the ones that finally won the battle is what? The bears. So they won the battle right there. You can see. Then you enter at this particular level. Always use your Fibonacci retracement to check for entry levels, right? So use that to check for entry levels when you are entering any reversal, any trend reversal, because if you don't use your Fibonacci level and you entered aggressively right here, if the trend has not fully reversed and it continues to go up, you're going to lose a whole lot. But if you entered around here and it reversed, the loss will be minimal compared to when you entered around that region, right? So this is the pattern number 3. Let's look at pattern number 4, which is the shooting star. So the shooting star signifies trend reversal as well in the market. It appears after an uptrend or a down trend. It usually look like the hammer, but in most cases the shooting star used to have a small wick at the top, a body, and a long wick at the other side. So that is how the shooting star appears. Now you will see it here. This one here did not show the small wick, but most of the time they used to have small wick, but this one did not show the small wick at that place. So let's look at the market in reality. You can see it here in the market. You can see the small tiny wick here. You can see it there, right there. So this is the shooting star. Now once you see this shooting star, the next thing you should be looking to see in that particular region you're trading it at is either a strong bearish or a bullish candle. Now this is the shooting star. Now after the shooting star, you notice that there was a bearish candle that formed, a strong one that formed. Now, like I said, always wait for retracement. After this formed, you can see the market retraced all the way to this point before this heavy drop right there. Now let's look at another one as well. Now if you look at this one, this is another shooting star. After this formed, but there was no retracement, the market continued to go down. So you would have missed this one if you're waiting for retracement. So let's look at it again. Okay, there's no other one here. So those are the examples of what? Shooting star in the market. So how do you trade them? You trade them within a trend or trend reversal. If it's a trend reversal, always wait for support levels, support at the bottom or resistance at the top. Always wait for it to happen within that area before you trade. And also look at your confluence from your indicator like your RSI, if it is in the oversold or overbought region. So that is how you trade most of these patterns. You don't just trade them alone. Then the fifth one and the final one is the morning star and evening star. So the morning star and evening star also shows trend reversal, appears at the end of uptrend or a downtrend, and the signal buyers and sellers are taking control of the market. So if it is happening in a downtrend, it means that the buyers are taking control of the market. If it is happening in an uptrend, it means that the sellers are taking control of the market. So let's look at how it forms. You can see it here. You can see there is a long bearish candle and a small bearish candle, then a long bullish candle. This is what morning star for a buy, that is bullish sign. Then evening star, the morning star actually represents buy, evening star represents sell. You understand? So the evening star shows this a long bullish, a small bullish, and a long bearish, signifying a sell in the market. So let's look at them in reality. You can see here a long bullish, a small bullish, and a long bearish, signifying a sell. Here is your entry level, and you can see the downtrend continues, right? So let's look at for the evening star. Okay, there is no evening star here. I didn't actually put the evening star, but let me just look at this chart if I will see an evening star formation right here. Okay, there is no morning star formation. This is an evening star. This one here is an evening star, but there is no morning star formation in this place. But when you see it, always use this clue here that I have put here to know their representation in the market, right? So these are the 5 major candlesticks that you must practice and understand if you want to know how to become profitable in this market. Look at them, practice them, use them to trade, and understand what to do. Now let me just give you some pro tips of how to use this candlestick pattern. Like I've been shouting, use them with a support and resistance zone. Wait for confirmation candle. I've shown you the confirmation candle you will see. If it is for the bearish sign, wait for a very strong bearish candle drop before you know that, okay, this is the confirmation. Don't trade based on one candle alone. I've said that before. Don't just trade based on you see a hammer, a doji, evening star, or morning star. You understand? Don't trade based on that alone. Understand that you have to use other confluences like your support and resistance, your RSI, your trend line to trade these candlesticks. Then when you've understand all of this, the next thing you want to do is to master these 5 candlesticks I've shown you. Go to your chart, practice spotting them on real charts. As you spot them, use your demo account to practice them. Use your demo account to take them and see which ones are giving you profits in your trade. You understand? Like in our academy and even in the free group, majority of the time we have 80 to 90% win rates in our trades. That is because I understand how to use these things and I know how to apply them to get the winning trades going, right? And that's why you must join that group so that you will also become profitable on your own. All right, that is all about the candlesticks. Now, if you want to learn more about trading the right way, understand how to trade, how to do all of this, and have me as your mentor, then you are welcome to join the Blockchainplus Academy today. To join the Blockchainplus Academy, you just hit the link in my bio and you're going to see how to get through to me. And you can message me using WhatsApp or Telegram, or you can also message me using, if you're on TikTok, you can message me using the TikTok in-app messaging and I will reply to your message. But you're watching from YouTube, just hit the link in the bio and message me there. You can also drop a comment and I will reply to your comments in the comment section. All right, this is for those who are serious about learning trading the right way and the smart way. All right, so this is all about candlestick pattern and how to spot them. I believe you enjoyed this video. If you've enjoyed this video this much and you've watched up to this point, just drop a like in this video, share it with your friends so that they will also benefit from this video, and most importantly, don't forget to subscribe to this channel. All right, that is it for me in this video. Till I come your way again, remain blessed.